Hi, this is Michael with BackToTheFutureTrading.com, and I wanted to go over a few things with you in regards to time cycles in relation to market trend or price action. We have a really great program system designed to uncover the upcoming turning times in the market that you trade using a centuries-old technique advocated and discovered originally, we believe, by William Delbert Gann, WD Gann, of trading fame and infamy. If there was a Trader's Hall of Fame, he would certainly have secured a position on the wall by now and would have been inducted long ago. We have these wonderful statements from him. I just want to review them with you real quick. Look at the first one. He says in his Forecasting by Time Cycles course, WD Gann speaking, time is the most important factor in determining market movements. And by studying the past records of the averages of individual stocks, you will be able to prove for yourself that history does repeat, and that by knowing the past, you can tell the future. And I think a lot of people make this harder than he meant it to be. Remember, this was back in the 20s and 30s, and we didn't have computers, we didn't have PCs, we didn't have laptops, iPads, iPods. There was no Casio calculator watch. Everything was done by hand. And so it was hard for him to envision a world where we could do the things we're doing with software and with computers. Although I suspect if he saw what we had access to, he would be overjoyed by the potential and the possibilities. So remember, the key words here: time is the most important factor, and here's the recipe, the formula. By studying the past records of the averages, you will be able to prove for yourself that history does repeat. By knowing the past, you can tell the future. So there's this very important three-step process. Look at what happened in the markets in the past. Discern from those patterns what's occurring. Project those patterns forward into the future, and then watch to see if past patterns don't recur. And he uses very important words: will and prove. These are not wishy-washy words. You're going to see results, definitive results. So that's one of the first things we see. Check out this next one. Also in his Forecasting by Time Cycles course, WD Gann says this: now, by a study of the time periods and time cycles, you will learn why tops and bottoms are found at certain times. You will learn. Again, very affirmative. There's not a lot of doubt when he talks about these things. Remember, traders like Gann were open to public scorn. Nobody really enjoyed what he taught. In fact, in an interview, Richard Wyckoff described Gann's methods as having angered traders. They sort of hated what he proposed because, in his words, it required thought and research. So Gann had proposed these things, and the impression overall from the people who were there was not a positive one, because people had to think. It required effort, mental effort. But again, he uses these very positive, affirming words. Study the time periods. You will learn why bottoms and tops come at certain times. And so it's not a surprise when we apply the same method that Gann used to the charts that we're studying, in this case, the NASDAQ on a 1-minute chart. We should see the kinds of things that he told us we would see. And I want to go through a few setups with you very quickly. Of course, on the bottom of our chart, we have the flux histogram. And the histogram is telling us what moves to look out for out into the future. And we can see the times coming up forward into the future. Again, those times Gann told us to watch for. And here we see selling pressure times at 7:44, buying pressure times at 8:01, and selling pressure times at 8:23. Those times are coming up. But what I'd like to encourage you to do is to look for certain setups that I want to go over with you briefly here, and I cover these in the webinars that I teach on Thursdays and Fridays, and there'll be links to those webinars below if you're interested. I use a 120 period exponential moving average. Now, there's nothing magical about it. There's no super secret formula or recipe. Just over a period of years, talking to dozens of different traders, I've come to see that there are certain moving averages that they use and have used successfully. Call them a workhorse moving average. And for me, it helps anchor the trend in relation to the chart. A lot of traders have different methods for examining the trend: higher high and higher low structure, trend lines, higher time frames. I find for me, to keep it simple, I like to use a very simple, very clear moving average. And so I have mine set to turn this color when it's moving up and to turn black when it's moving down. So that stated, there are two setups when you're trading time cycles that tend to be, in my opinion, very beneficial, that you should research and explore when you're looking for these signals in the markets you trade. The first one of the two is a signal with trend where the color of the dot, the color of the histogram, aligns with the prevailing trend. So if the trend is moving up, we're looking for a buying pressure signal. This is probably one of the higher probability setups that I've come across. And so when we align those two things together, when we're waiting for 6:10 a.m. Eastern, and we get to 6:10 a.m. Eastern, and the candle is closed above the moving average, I'm watching for buying pressure, but now I have a window of time. I have from 6:10 until 6:22, 12-minute window for that setup to work, at least in its initial phase. And so what many traders will do is they'll actually use the stop area surrounding the dot. This dot prints about 3 ticks above or below the high and low of the candle in the case of a buying pressure signal, below the low. And so they'll put their stop either at the dot or directly underneath the dot, and then take a trade right here. So during my webinars, you'll actually see me sneak in real quick and put 3 little letters, signal with trend. And you'll see there was another one of those over here at 6:33, a signal with trend. Finished exactly where it started by 6:40. So a few ticks of motion here, and this is pre-market, so there's a pretty thin herd operating price right now. The second trade, which is a little less obvious, is also a signal with trend, and it involves a breakout. And this one's a little easier, a little harder to get your head around, and I want to focus on it right now. See that selling pressure signal at 6:22? I teach people to look for breakouts around these times. And so where we use the dot as a stop in the earlier setup, I'm actually using it as a red line of sorts. Do not cross this line. And if you do, I know what's up. That's based on the following theory. There are 2 types of market behaviors according to Richard Wyckoff. We have accumulation phases where the market is moving up and trending up, and then we have distribution phases. And both of those begin and end with a very distinct sideways channel, with a very distinct beginning breakout at the start and finish of those trends. So what I've noticed is that in an uptrend, in an accumulation phase, when we get to a selling pressure time, the market goes into one of these characteristic reaccumulation phases. It goes choppy and sideways for a little bit, but that doesn't last forever. This little coil, this little spring, builds up a lot of buying pressure in the markup phase. And at one point, the popcorn pops out of the edge of the bowl, and over on the side onto the counter. There's an explosion of unrestrained buying at that point when the sellers and the buyers, when the supply and the demand are no longer equalized, the markup phase continues and people continue to accumulate positions. And then vice versa, if there is a distribution phase, if the market is moving into lower lows and lower highs and lower lows structurally, when we arrive at a buying pressure time, we again have that consolidation coiling phase, and it can't last forever. There's a imbalance between buying and selling, supply and demand at that point, and the market eventually breaks down and continues along the path of the distribution phase. And so what I encourage people to do is watch for those counter trend coiling spring pressure times. And so in this case, I call this also a signal with trend, but I'll teach people to watch for a break of that critical level. See, what this means is we were expecting the market to come down. We were expecting a slight pullback or a retracement. But if this is one of those sideways coiling reaccumulation phases, we're going to wait right here at the dot. Now this does two things, and this is important for traders in general. If you're using NinjaTrader indicators, if you're using indicators for NinjaTrader or TradeStation, MetaTrader 4, you're using these tools on your screen, you have to be very clear. You need to have charts that are simple to read and identify and understand. Don't load so many tools on your chart that it becomes a hindrance for you to watch these things. Keep things clear, concise, where you're able to look instantly and say, okay, I know exactly what this is telling me. So here we're just leveraging the visual pattern of the dot, and we're saying if it comes all the way, if it doesn't go down and starts to drift and move higher and move higher and move higher, the sellers we were expecting at 622 have finished. They're exhausted. There's nothing left for them to do. They're standing aside. And so when that happens, we encourage you to use the closing price, the low of the candle in this case, that got you there, as a stop. Let me show you an example of that over in gold. Here we're looking at gold futures, and we have our characteristic histogram chart where we see the times coming up to the right where we're expecting moves based off of the historical recurring patterns of the past. And then to the left we see what happened at the patterns we were waiting for things to occur. Now, keeping in mind what I just taught you, the primary focus when you first start using this technique or the software is to identify the selling pressure signals in the direction of the prevailing trend. So if the trend line is black and moving down, or whatever color you've chosen, a lot of people will pick red. So let's do that just to be consistent with what most traders are looking at. If you're seeing that the moving average is sloping down and you're below it, focus on the times that were primarily selling pressure times. You can see the next one coming up here is 652, and then if the trend is still down, the next selling pressure time is at 715. But in those cases, you'll see again, if we just adopt that same technique, that price does not go above the red dot at that time. And so we have those selling pressure windows again. Similarly, we have that technique with the crossing of the line. So when we have the green dot here, no cross. But when we have the green dot here, you can see there's a breach. And so that would be considered another signal with trend. The coiling has stopped. The spring, that little sideways price action that we were watching right here, is over. We're at the bottom of it. We've punched a hole in the bottom of the boat. The boat is now flooding with water. It's sinking, it's sinking, it's sinking, it's sinking. And so when we see price moving lower into that consolidation area, in particular, a very simple thing to track, the height of that dot, it's a very strong indication that the buyers we were expecting did not drive price higher. In fact, they've allowed the sellers to slowly erode at the gains that are being made, at the prices that are being held, and we just fall through the bottom. So focusing on the signals with trend can be a tremendous boon for you in the very early phases of the software usage, because it puts you in a position where you're in line with what everyone else is doing. About 60% plus of our customers who report they're profitable report adopting a trend trading strategy. It's very hard to pick highs and lows, double tops and double bottoms, and there's this premise of catching a falling knife that inevitably leads to account destruction. So whenever possible, using a time-based system like the one we're looking at here, or using any other system, try to find and look for signals or entries that put you in the flow of the trend. Will it last forever? No. But the goal is to be in those moves, to be in the breakdowns and catch those little pieces of profit along the way and be in the direction that everyone else is trading in. Otherwise, you're constantly being stopped out and second guessing yourself. So put yourself in the direction of that overall flow. Don't be a salmon that swims downstream when all the other fish are swimming upstream. We also see those patterns on daily time frames. Let me show you what I mean. This is an example of the Flux daily cycle marker chart, a NinjaTrader indicator produced for the NinjaTrader indicator community. And we have the same signals. While there are 4 phases here, a phase 1, a phase 2, a phase 3, and a phase 4, we again have what we referred to earlier as the signals with trend, SWT. And I'm just going to copy and put that there. So one thing a lot of new customers with our software describe having difficulty with is filtering out all of the available time cycles, all of the cycles that we have to choose from. And so this becomes a very important technique in the early phases of your education, because it instantly cuts the number of signals that you're watching for by half. So in this case, if we only focus on buying pressure times in an uptrend, we don't even have to look at the selling pressure times. We're just looking for times where we're expecting buyers to come into the market and drive prices higher. And you can see that overall on the S&P, at least since January, February, December, there's been a healthy movement at each one of those times. But again, keep in mind the second half of that. If we look at all of the selling pressure times and we take those red dots that we were talking about earlier, and I'll just bump it up a couple ticks so we can see the physical line. These are places where we're watching for the end of those accumulation phases. And so I'm watching. Here's an example right here. I'm watching. Here's an example right here. So along the way, there were 3 places to enter with trend long. One here, one here, and then one here. Using that same technique I just described to you on a 1-minute NASDAQ chart. And these would also be signals with trend. So look for opportunities like this when you're analyzing the software. Look for opportunities like this when you're trying us out and maybe following along with a histogram during the week. It's a pretty healthy technique, and again, always keeps you on the side in the direction of the prevailing flow of the market. If almost 3/4 of the traders that I know to be successful are using a trend following technique, then it should be something you at least research and attempt to replicate in your own trading component plan. There's one other setup in regards to the trend trading that I want to describe with you. If you have a signal like this one here at 7:35 and it starts out below the moving average, you'll eventually have a crossover candle like this one here. And so when you have buying pressure below the trend line, obviously that's a counter trend signal. We're hoping it'll touch that green dot and break down. But if it comes back up and pokes its head above the moving average, we've sort of broken through the ice. We're seeing strength where we presume to be weakness. And so that can be the beginning of a signal with trend. It's not the beginning of the move, but we're finally seeing all of the signals in line. We have an if-then statement. If I have buying pressure time and I close above the moving average, then I enter the market long and look for profit, taking a fixed target profit or waiting for the opposite time cycle to arrive. And here you can see an example of a signal that would have gotten stopped out. A signal with trend that crosses over on the moving average is fallen beneath. And then further examples of those kinds of signals that we were just talking about a moment ago. But when you have a crossover candle like this, it can be an additional way to enter into the flow of the market in the direction of a buying pressure or a selling pressure time that we're waiting for in the future. So this is a great example of what we just talked about on the dollar CAD here in today, February 9th, 2017. We have another example of one of those crossover signals over to the right. Here at 2 a.m. we have a selling pressure signal, but the candle closes above the moving average. It isn't until a few bars later that the candle actually closes below the moving average. That crossover candle puts us in the flow of the market, and we have our if-then statement satisfied. If the market is arriving at a selling pressure time and we have a candle below the moving average, then we look to sell the market with a potential stop at or above the height of the dot, a fixed target, or holding on to the trade until the opposite time cycle arrives.